Hello, this is Jordan, and this video is being recorded on the evening of Monday, September 16th, 2019. And in this video, I'm going to discuss the question, what a potential crash in the stock market might mean for gold and also gold stocks. Now, first, I just want to state that my view is that we're not headed for a crash in the stock market. People expect the next bear market to always be like the last one. So, what happened in 2008, people were looking for a repeat of that naturally because that's the last thing that happened. But as I discuss in my book, which you can get at thedailygold.com, you can opt in there at the top of my homepage, not just with respect to the stock market, but as far as many markets and asset classes, there's very strong similarities between where we are now and where we were in the early 1960s. For example, we're coming out of secular lows in bond yields, inflation, commodity prices, and gold stocks. I have said that the 1957 low in gold stocks looks equal to the 2016 low. And the stock market is in a very similar position now as it was then because it's in a secular bull market. It broke out of the 2008, 2007, 2013. It broke out of those tops. So it's in a secular bull market. We can't deny that. However, but because of valuations, the expected returns over the next decade are only roughly 2% a year for the next 10 years. And the most similar comparison to that is the early 1960s again. So, and also, if you look at what happened after the 1929 to 1942 bear market, in what happened after the 2000 to 2009 bear market, or you could say the 2000 to 2011 bear market, because in real terms, that's when commodities peaked and stocks bottomed. The action since then has been very similar both times. And so after the twin bear markets from both those secular bear markets, there was no big or really bad bear market for a while, but there were lots of mini bears and corrections. If you look at, well, first of all, if you go back and you look what happened from 1949 to 57, that was probably the best 8-year period ever for the stock market. If that's not the best, it was number 2, and number 1 was 2009 to 2017. But since those points, if you look at the corrections or mini bear markets that we had, you look at 1957, 21%, 14%, then 28%, then 22%. So there really wasn't like a crash or a real nasty bear market after that secular bear. There also was a little one in 1948 to 49, or 46 to 49, but it was pretty mild. You look at what happened since 2011, the major low in real terms for stocks. We've just had 3 corrections, or you could call them mini bears. So that's another similarity. So my near-term outlook for the stock market, and I wrote about this last week, especially I would say over the next 6 to 12 months, I see good performance in the stock market before we get into a potential bear market. And the reason for that is after the inversion of the yield curve, the market tends to perform pretty well before it then has a bear market. And also, if you look at sentiment indicators, tons of money has moved out of equities in recent months, and the stock market has held up well despite sentiment being very bearish. So the question of a stock market crash, it's really not the right question to ask right now. I don't see it happening anytime soon. However, after the next 6 to 12 months, maybe we have some kind of a bear market. Maybe it's 25 to 35%. I don't know, but I don't see a crash happening based on everything I'm looking at. But to get to the real point of this video, what would happen? But what would happen to gold if we had a bear market in stocks? Now, during a bear market or a crash in stocks, gold and gold stocks, they don't really follow the stock market unless they've been trending up with the market into that peak. This is something I discuss in my book. But the best examples of that, when precious metals were trending higher with the stock market into a peak, were 1980 and 2008. And gold and gold stocks were rising for years and years into those peaks. So, we're in a different situation now. And I will say another example of that, it's not a perfect example, but it was the end of 1987. Gold had been rising for 3 years straight with the stock market into that peak. And then it sold off as the market crashed. But after, you can see after that crash, when the stock market bottomed, gold and precious metals continued lower. So, I mean, could we see a repeat of 1988? It's possible, but only if gold goes up with the stock market, I'd say, for another year or so, and gold would have to, it'd have to have a really strong rise, probably to $1,900 or $2,000 an ounce to bring that kind of scenario into play. I don't see it happening from where we are here and now, because even if we just go back a year to that low we made in 2018, around 1180, I mean, that's pretty close to a peak of the stock market. I mean, it's made a couple peaks over the last 12, 18 months. But basically, since 2011, other than the last 3 or 4 months in gold, gold's primary trend has been down. The primary trend in the stock market has been way up. So there's not a lot of, even despite the last 3 months in precious metals, there's not a lot of money that's moved into precious metals, at least from a bird's eye view. I mean, to be honest, most of the money is in bonds right now and not in stocks. So, but I mean, that's a whole nother video. But basically, gold and gold stocks are set up to benefit from a bear market in stocks, because when that bear hits, we're going to see the Fed continue to lower rates and implement other emergency measures. They will prefer to let inflation run instead of allowing a recession to happen. I mean, it may happen anyway. So in other words, their policy will be to suppress real interest rates. They're going to look to, again, get more inflation in the system and drop rates. And I don't know if they're going to do a helicopter drop and give people money or whatever, but all of those measures are going to be bullish for precious metals. So, I mean, if that were to happen immediately, I'm quite confident that it would be bullish for gold and gold stocks, and you'd see them trend higher, even as the bear market happened in stocks. And historically, there's instances in the 70s and also in the early 2000s when precious metals performed very well while the stock market was enduring a bear market. So we have to look at history and the entire history. We can't just look at 2008. Again, people are thinking that what happened in 2007 to 2008, we're going to see the exact same thing happen again. We're going to have a crash. We're going to have a banking problem. Gold is going to go down. We're going to see this liquidation. Maybe we will, but I don't think so, because normally you don't see the same thing play out during the next recession, the next bear market, the next downturn. So unless over the next year or so gold makes a strong move higher, say to 2,000, and it goes up and the stock market goes up at the same time, unless that happens, then gold and gold stocks are positioned to perform very well when we do get a bear market in stocks in another downturn. So to conclude, I don't see the risk of a stock market crash, but I do see potential for a bear market in stocks, maybe in the second half of 2020 or the first half of 2021. And unless gold has already run to $2,000 an ounce before the bear market in stocks hits, the bear market is going to be very positive for precious metals and a catalyst for much higher prices. So that's all for today in this video. You can follow all of my work at thedailygold.com. I mentioned my book. You can opt in there at the top. I am going to be doing an update since it's a couple months old, and we've had this big move in the sector. So if you're on my list, you will get the update. And consider my premium newsletter. You can find it at thedailygold.com/premium. If you want to know which juniors have the goods of the best potential, sign up for our service. It's highly affordable. Thank you so much for listening and watching this video, and I look forward to publishing another update for you in the days and weeks ahead.